This is Bobby Kraft coming to you live on SNNLive. I'm here at the Toronto Resource Investment Conference 2013, and with me is Leonard Melman of the Melman Report. Leonard, welcome to SNNLive.
It's a pleasure to be here. Thanks very much.
So you're here, you're a featured speaker, a lot of people are coming over to the booth, and the reason they are is because they want to know what's going on in the market. So tell me, what's going on?
Well, during my presentation, I tried to point out there are two forces at work the way I see things. One is a short-term force that is acting to the negative for the precious metals. It's because for the last several years people have been told that there are these great crises that are going to be bursting around us because of money creation, because of enormous debt and deficits. We're going to have hyperinflation. Well, they haven't seen any of that, and they've been told that the European economic community is going to collapse, but it hasn't collapsed. And they've been told that there are going to be international disorders on a massive scale, and they haven't taken place. So short term, they've become skeptical that any crisis is going to develop, and for that reason, I think they have pulled back a lot from their gold and silver investments. But the other picture is long term, and I believe in the long term, there are tremendous pressures building just below the surface. We have international tensions that are growing, like Egypt, Syria. We have monetary crises measured in US dollars that are astonishing, even though they haven't broken yet into the public consciousness. We have interest rates that are poised to rise, and if they rise, they could wreak havoc on housing and automobiles, and most particularly in government debt. I mean, just think about it. Right now, the U.S. government, between short and long-term borrowings, is paying an average of about 2.5% per year on a $16 trillion debt, so that's about $400 billion in interest. Actually, they don't even pay that much because some of the debt is owed to other government agencies. But if the interest rates, say, go to 10% within 2 years and the national debt reaches about $20 trillion, then suddenly 10% of $20 trillion is $2 trillion a year in interest, and that means a quintupling of interest payments, and there's no way that America can raise that kind of money. So you've got all these crises building. They're not yet in the public consciousness, but I think they are growing, they are inevitable, and when they start hitting the consciousness, we'll see a tremendous rally in the gold and silver and other precious metals as well.
Well, one crisis that you mentioned that is actually somewhat current happening is what's going on in Syria and what's going on abroad and everything going on in the Middle East. So my question to you is, why do you say when a certain crisis like that, for instance, how is the price of gold and silver related to something like that becoming a larger issue than it already is?
Well, just think about it. At the very beginning, when the crisis hit, when they counted, 1,500 to 2,000 dead Syrians from chemical gas, pardon me, the immediate sensation was the United States was going to powerfully attack Syria. Who knew where that would land? America getting involved in another war. There was a great deal of fear. But look what's happened in the subsequent 2 to 3 weeks. The U.S. has not gone to war. We're suddenly not sending missiles and drones with bombs over Syria. Everything is degenerated into quiet talk, and nobody knows where it's heading. And so here's yet another example of what looked like a crisis of massive, immediate proportion that has just quietened down and gradually is receding from public view. It's part of the same principle. The one thing that could happen that's sort of a shot in the dark, if you will, is what if Russia proposes one course of action and the U.S. adamantly demands another? That's a whole different story, because then you may have Russia and America headed on a collision course, and that could really propel gold and silver much higher. But failing that, it's just another one of these crises that never failed to truly develop.
But why would it drive gold and price higher? What's that one thing right there? That's what I'm trying to understand.
Uncertainty leading to panic. If you look at every previous historic golden bull market, they have always had those ingredients: uncertainty and panic. In 1974, for the first time in American history, interest rates reached 14%. Gold went from about $60 to $200. Pardon me. And you also had, during the 1979-80 golden climax, you had Afghanistan being invaded by Russia. Nobody knew how America would react. You had America dropping out of the 1980 Olympics in Moscow. You had interest rates reaching 17-18%. People were being driven out of their homes. You had 17-18% inflation. There was uncertainty and panic in the air. If something reaches that stage where it brings about uncertainty and panic, then you will see gold and silver move, and they will move because the panic leads to a lack of confidence in government, and all the currency we have is simply fiat currency, and the only thing giving it validity is confidence in the government that underwrites the paper. Gold needs no such underwriting. Paper needs it 100%. You start diminishing that 100%, and people will start switching to the precious metals in droves. At least that's what I believe history has taught us.
So what is I know you did a very general short-term forecast, but for our audience, going into the end of 2013, beginning into 2014, for the last quarter of the year, what are you seeing? What metals are you seeing as possibly up, down? What's going on?
Okay, well, I wear several caps. One of them is that I am a technical analyst. I'm a member in good standing of the Canadian Society of Technical Analysts. And we're at a critical point. We bottomed in gold at 1,175 at the very beginning of July. Since that time, we've had a rally up to 1,430, but now we're headed back down. Gold today was down about $35 at one time, and we're at about 1,330. So I'm watching my charts very carefully. If gold breaks below that 1175, then I would think there's a possibility of a real massive sell-off. But failing that, if gold can hold above 1175 and then turn upward, then I think we will see a very powerful fourth quarter rally. And once it gets going, I think it could have the same kind of momentum that we saw all the way from 2002 to 2011. And that rally moved gold up by 700%. Well, if we start at a base of 1,200 and go up 700%, we're talking about $8,000 an ounce or more. And it could happen, I believe, spectacularly. It doesn't take much to change sentiment. We've seen that so many times. If you start reintroducing fear into the overall equation, then the situation for gold and silver becomes very bullish. So a lot of it is technical, but if we can get a good rally going during the third quarter, what's left of it, then I think the fourth quarter could be quite beneficial to the markets, which, by the way, would start helping to lift these junior mining shares as their assets in the ground became valued higher and higher with each day.
So where can people go and find more information about you write a newsletter, the Melman Minutes. Where can people go and find out more information and subscribe?
Sure. The website is www.themelman, report.com. I write commentaries 3 times a week, published on Monday, Wednesday, and Friday, called Melman Minutes. And it's very easy to access them. Just go to our website. On the front page, there's an icon called subscribe, and it's free. The economic cost of the site is borne by companies that list their corporate information in our corporate report section. And so there's no cost involved. All you have to do is provide us with a name and an email, and we'll start giving you a service on our blast list. Every time I write something, it'll go out to you immediately. And like I say, those come out every Monday, Wednesday, Friday, except when I'm traveling or out of computer reach.
You heard it right here, folks. It's themelmanreport.com. This has been Bobby Kraft coming to you live on SNNLive at the Toronto Resource Investment Conference 2013. With me again has been Leonard Melman of the Melman Report. Leonard, thank you so much for coming on to SNNLive.
Bobby, it's been a pleasure to talk with you, and I look forward to future visits.
As do I.